Rana Gupta is with us, Senior Portfolio Manager and India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thank you for your time. I mean, since you have a bird's eye view of what's happening in global markets, what foreign investors are doing, this wait has been has been a long one, right? For foreigners to show some interest. The constant refrain has been valuations are too high. So I just want to start with that point as we wrap up 24 and head into 25. Will foreigner interest start to reappear? Typically, this allocation happens in the first 20 days or so of January. So that's an important time. How are things looking to your mind?
Sure. Thanks. Good morning. Thanks for having me. I think as far as foreigners are concerned, they, of course, will look at the valuation, the earning growth, and all of those things. But I think when you talk about if we have looked at outflows from India for last couple of months, I think this outflow is not India specific. This is more emerging market because of the US dollar going up and the expectation of US exceptions to continue and so on. But I think as the new year comes, we will see that even in the emerging markets, India still looks one of the best placed markets. I mean, just look at one few of the larger emerging markets, right? China has its own issues to deal with, whether the fiscal stimulus will come or not come. People are waiting, but there is not much clarity how much it will boost growth. Brazil, you have seen what has happened overnight. The fiscal concerns are kind of blowing up there. So I think in emerging market space, there are a lot of challenges. And within that, India, with its very solid macro, looks very well positioned to receive the emerging market flows that the foreigner is going to make.
I just want to make a quick mention of the flash which is at the bottom of the screen. This is source space information. Remember, the union budget this time is that's 2025 is on a Saturday, which is the 1st of February is a Saturday, and the budget is on a Saturday. And the obvious question is, will markets be trading? And what we learned from sources is that exchanges are going to be discussing this today, and essentially to keep markets open on the union budget day that is on a Saturday. And sources are saying exchanges would like to give investors the opportunity to be able to do something on an important day like the union budget and not just sort of come back on a Monday and then react to what really happens. So it's an important Saturday and the first big domestic event, of course, of 2025. That's the union budget. Nigel.
Yeah, we'll keep an eye out on that as well. Important alert coming in there. And by the way, Prashant, the reason I got pumped is because Travis Head, which has been a big problem for India. Shiraz has sent him back
nice.
to, so that's 6 wickets down. Our boys are doing well out there. Well, let's get back to the markets. So, hi, Rana. Good morning and good to see you win. Sorry for that. Just need to update our viewers with regard to the cricket match action as well. India is doing quite well out there. But Rana, tell us, top theme for 2025. What are you most bullish on? Reasonable valuations, good outlook. What do you like?
So first of all, I think from a top-down perspective, I think there are reasons to like India is that India is one of the few emerging markets which has got policymakers got enough room without disturbing the macro stability to kind of boost or incentivize growth. So I think from that perspective, we expect government spending to resume for the later part of this financial year, as well as government to reprioritize its spending in the budget when it presented February next year. We also expect, RBI has already cut CRR, injected liquidity, and we also expect RBI to keep doing that and also somewhere in the April, probably to cut rates. With that background in mind, we expect that rural consumption-focused stocks, they have done not really too much, and they look like they are poised for a bounce into the next year. And by saying rural consumption, I really don't mean the consumer staples companies. What we are referring to more like tractor, some select two-wheeler stocks, cement, some construction stocks, so on and so forth. So that's one segment that we like. As the liquidity improves, we also like the large banks, which have struggled for deposit growth. For them, situation will ease at the margin. And as the rates fall, we also like the non-banks, which are into secured lending. So these are the two spaces that we like, and we have always liked digital platforms. But given the run-up that we have seen in the stock prices, they could take us some shorter-term pause. And within domestic sector, we continue to like telecom. Among the sectors which are outside focus externally, given IT is a good play on US growth continuing, we continue to large the large cap IT. We also like the pharma CDMO space where the capacities are already available. So I think that sector, irrespective of the Biosecure Act, is going to see pretty strong traction in the years ahead.
Uh, Outside of the non-traditional conventional sectors, Rana, there are lots of ways to now play some of these themes which were not there 2-3 years back in the listed space, and many more are coming because the primary market is so hot. Anything comes to mind which I think one could work with?
Sure, I think one of the historical examples will be the digital space. I think we were bullish on that when this was still a new theme, and now the theme has caught on, and it's now a mainstream theme with new IPOs coming to the market. I think the another theme that we like and we can play it in not in the main stock but through other ways is the EMS. I think domestic component manufacturing is going to grow. Of course, the listed stocks have had a fantastic run and their valuations are quite high. But you can play the EMS component sector. I mean, some of the component sectors will be going for EMS, will be the CNC machines, will be the glass making companies and all these companies. So I think that is one example that comes to definitely comes to mind.
Rana, EMS companies, you want to narrow down on that one because there is clearly a big runway, but they're coming at very hefty valuations. So if you could narrow down on that theme, what do you like out there? And I guess if you're getting into these themes at these prices, then you must have a longer term view. You can't have a year or so in terms of a time frame because these stocks have seen a very, very sharp run up.
Oh, absolutely. I think, first of all, I think I'm not talking about the EMS mainstream companies, but I'm talking about the component suppliers to them. And definitely their valuation is also not too cheap either. We do see a long-term growth runway to till about 2030, and given all the focus on producing more in India, we also see the corporate interests like the US multinationals giving more orders to them, making more in India. In fact, the iPhone shipments from India is really going up. So we like to play that value chain, and we are talking about the components to the EMS spaces like a sense machines and like glass, the phone glass making and all those things. There, the valuation is still high, but given the long term opportunity, we like that space. Also, might point out, if I call them EMS ancillaries kind of thing, they are still a lot cheaper than mainstream EMS companies. One can say that these companies, as long as the EMS growth continues, which we think it will, they even can grow at a faster pace than the mainstream EMS companies.
Okay, all right. One more theme I want to discuss with you, Rana, is this entire stock market play. Whether you bought brokerages, exchanges, everything has done well. Now, there is some curbing with regard to trading action by the regulator SEBI. How would you approach this theme? Because you're sitting on big profits out there. Financialization theme in India is likely to pick up pace, but in the near term, that could be a bit of an issue due to the change in regulations.
So that's a very good point. We also like the financialization place because it's again a long-term, structurally very good place to win. But the way to approach it, if one is playing let's say the companies which are exposed to the markets, where their earning is determined by the markets, and there you are getting a lot of volatility, because going forward we expect markets to return moderate returns from here, and the earning estimates are high, the valuations are high. So it could be that if someone is buying brokerages, which are essentially transaction-based revenues, those kind of companies can be exposed to some earning disappointment and maybe some pay disappointment. But having said that, we still like this place. What we like in this place are the companies who have annuity kind of revenues, or as we call it, annual revenue, high retention of clients and annuity revenues. These companies typically will be in the wealth management space. So we like that space. We would like to play that space through wealth management. And these wealth management companies are not necessarily only about mutual fund distribution. They do a lot of products which other financial intermediaries cannot offer. And in India, the top portion of wealth is growing, and demand for those kind of products, sophisticated financial products, is also growing. So we like that space.
By the way, Rana, so many IPOs, right? I mean, most of them, of course, by the time they hit the market, are kind of they're priced aggressively, and they further get juiced out on day one and immediately after listing. But sometimes some go under the radar, and there's no interest on day one, but they turn out to be big winners. Anything you looked at which seems interesting to you?
Again, I won't be able to comment on specific names, but you're right. I mean, if you just look at the IPOs that are listed, There is one construction company which listed pretty subduedly, but then the interest kind of ramped up. Now, as far as IPO concerned, I think one has to be careful in terms of participating, because as you rightly point out, the valuation comes at a place where it plays out in the first 1-2 days. So best time to participate in IPOs would be when the markets are a little sentiment is a little bad. The IPOs coming there, we have seen that management is also willing to offer reasonable valuation, and those kind of start making money for investors. And recent listing of a digital platform will be a good example of that. But regarding IPO, I think another thing worth mentioning is that one has to be careful about, in terms of market fundamentals, the IPOs by the foreign promoters. Foreign promoters, when they are selling stock and taking the money out, this is basically India exporting capital. And the foreign promoters taking this money out, they're not even going to invest back, which can have a bearing for the long-term earning growth for the market as such. So, we hope going forward, we will see some sell downs, and that sell downs will come. Let's be honest about that. But we should see actually reasonable IPOs, reasonable fundraising from the Indian promoters or the foreign promoters who will reinvest back into the company's growth.
No, absolutely. Rana, it's a great chat. Thank you very much for joining us, and thank you for being with us through 24 like in the previous years, and we hope to speak with you in early 25 as well. Thank you very much for joining us.